You won't want to miss out on this video if you're thinking about making stock market investments. Selecting the right firm to invest in is a significant difficulty for stock investors. If you find yourself in this situation, the advice given by multimillionaire Tesla investor Ron Barron can be all you need to select the right investment for you. Ron Barron discusses his 40 years of investment experience in light of the Tesla bull. His goal is to invest in a company that will enable him to double his money every 4 to 6 years, rather than expecting to make money from it instantly. Hi everyone, happy to be back at Tesla tomorrow. Although the price of Tesla shares has increased by over 80% so far this year, Barron Capital founder Ron Barron believes that this is just the beginning for the company. Not only is Ron Barron's company among the top 20 holders of Tesla shares, but documents reveal that Ron Barron Funds has a bigger percentage of the company's total portfolio, roughly 11% higher, allocated to the stock than many other major shareholders, who typically cap out at 5 or 6%. Barron is a buy-and-hold investor who is optimistic about his fund's ability to recover and provide stellar returns going forwards, mostly as a result of his large bets on fast-growing businesses. What aspects of a company does Ron Barron consider important? Let's find out, but first, if you enjoyed this kind of stuff, please remember to hit the notification button to stay up to speed and hear everything we have to say about Tesla. Barron is especially fond of his leisure stocks, which he believes have significant upside potential in the years to come. This is driven by his optimism about an eventual market rebound and economic recovery. In addition to his bets on these companies, the billionaire investor has historically looked to invest in companies that are growing revenues over 15% annually on average. He also looks for those that actively reinvest in their business. Even though Ron Barron acknowledged that the stock market's performance over the past year hasn't been great, he did characterize it as being relative. Last year, investors sold off their shares of most companies due to fears of an impending recession. But Barron advises them to understand why they are investing in a given stock and the company's growth fundamentals, according to Tesla Bull. According to Ron Barron, investors might want to think about placing a wager on businesses that have a competitive advantage. That is, businesses that make it harder for rivals to compete with them. One possible explanation for Ron Barron's strong interest in Tesla and its shares is the company's significant competitive edge in the general car market when it comes to electric vehicles. In the business, Tesla has the biggest edge, particularly when it comes to battery supply factories. The automaker has the capacity to generate these batteries through innovation and consumer choice, and with time, it may grow into a significant battery supplier. Although battery packs are the most expensive component of an EV technically, Tesla is clearly far ahead of the competition due to their large cost advantage. The maker of EVs is already dabbling in this industry and has strong ties to some manufacturers of battery raw materials. Similar to this, most Tesla enthusiasts will concur that Tesla's exceptional manufacturing efficiency is what keeps it ahead of the competition. Its highly automated manufacturing, pricing power, and rapid vehicle production all contribute to its efficiency. The remarkable financial outcomes of the automobile firm can be attributed in large part to all of these variables. Tesla will benefit shipping firms from its early adoption of self-driving technology. The only thing cheaper than saving money on gasoline is saving money on paying a real person to drive something to a new place, yet both are easily accomplished with cars like the Tesla Semi, because the Tesla Semi is based on technology that currently exists and can take use of Tesla's expanding electric vehicle industry. The company can also enter the truck business at a price that is competitive. When Tesla's truck achieves autonomy, it will be able to cut costs overall by doing away with the labor expense. In addition, Tesla intends to offer a battery that has a longer range than its rivals, as well as a new quick charging technology. The DC rapid charging system uses a water-based coolant to ensure that the power it produces is safe, and it can deliver up to 1 megawatt. The customer pickup truck that Tesla plans to market, the Cybertruck, will also be powered by this charging technology. Tesla has also been in the market for a while, which is a big plus for the automaker, particularly when it comes to developing important parts of the truck like the battery. The majority of Tesla's ambitions are potential game changers that will support the company's continued leadership in its sector. In the upcoming years, projects like the introduction of the much-awaited Cybertruck and the increase in automobile manufacturing at its gigafactories in Berlin and Texas will also cause Tesla's price to skyrocket. Undoubtedly, a number of issues continue to influence the manufacturing efficiency of electric car companies, including supply chain bottlenecks and the inflation of battery costs. Roman contends that even while these elements could have an impact on a stock's value, investors should refrain from panicking and dumping their holdings. He continued by saying that he is more concerned with the company's fundamentals than he is with inflation or the state of the economy. The Tesla bull recently reiterated his extremely bullish opinion of the electric vehicle manufacturer, predicting that the stock price of Tesla may reach $1,500 in 2030. Darren claims that even with rising rates and recession worries, he feels at ease being the owner of fast-growing business like Tesla. Barron clarified that his main concern is not the economy or stock market, but rather reiterating that Tesla is the safest vehicle ever produced. Wall Street puts Tesla shares at overweight as well, which is consistent with Barron's positive assessment. Ron Barron thinks there is a growing need for EVs. Barron stated that Tesla might meet Musk's production target of 20 million cars by 2030, citing the company's recent record revenue and profit for its first financial quarter and the continued strong demand for its electric automobiles. According to Ron Barron, there is currently an unparalleled demand for Tesla vehicles. Elon Musk anticipates selling 20 million vehicles by 2025, yet he plans to buy just 1,500 shares by 2030. Ron Barron stated in November that despite the general market sell-off, there is still strong demand for Tesla. Barron predicts that Tesla will be the biggest and most lucrative corporation in the world in 10 years, despite the fact that the carmaker's shares dropped by 50% in the previous year due to a general market sell-off, compared to 41% in early 2021. Barron now owns an astounding 45% of one of his major funds that is invested in the automaker's equity. Barron's company manages 19 funds, including the $700 million Barron Focus Growth Fund and the $6 billion Barron Partners Fund, which together manage close to $40 billion in assets. Several of these funds have placed significant bets on Tesla. Higher interest rates have hurt a number of growth stocks, and Barron acknowledged that it can be difficult at times when the market is falling and there are frequent dips. However, he added that this is the time when his buy and hold philosophy is more crucial than ever, because funds with relatively low turnover have continued to buy when the time is right and have only sold when the market rebalanced or the fundamentals changed. Despite the chaos, Barron said, businesses that invest in should prosper and expand. He also added that markets will eventually stabilize and that a rebound is expected by the end of 2024, with equities probably going back to where they were in November 2021 and then doubling every 5 to 10 years. A primary cause of this optimistic, the company's largest wager on Tesla, is Outlook. Despite a 50% decline in Tesla shares in 2022, the billionaire money manager's firm has made billions of dollars in gains since he first invested $387 million in Tesla between 2014 and 2016. Barron said that if he could, he would buy additional phones while taking care of Musk's Twitter problems, but he was still certain that his phone's position will pay off in the future. According to Barron, there are a lot of chances with the social media network. The Tesla bull just revealed that he gave Twitter a $100 million investment. Elon Musk discussed last year's acquisition of the social networking startup in a CNBC interview. Barron claimed he received a guarantee that the investments would double or triple his initial investment. He clarified that upon his company's investment, he discovered excessive expenses and really poor management. Given his desire to invest in Musk's companies, Ron Barron appears to have a great deal of faith in Elon Musk. He asserts that, aside from Tesla and Twitter, everyone will be aware of Elon Musk's SpaceX business. Barron continued, the spaceship will soon be providing internet for the planet through its stalling satellite broadband service. Reusable rockets, which Musk has dubbed the holy grail of space travel and which are essential to pushing the frontiers of space exploration, are the subject of the company's Starship projects, about which he remained enthusiastic. According to Barron, Tesla's market capitalization will eventually rise to $4.5 trillion, a 625% increase from its current valuation of $630 billion. He claims that he has made a significant amount of money with Tesla and that by holding on to its shares, he will continue to increase his wealth. How do you feel about Ron Barron's Tesla prediction? Please share your thoughts in the space provided below. If you'd like to learn more about Tesla's recent activities, click the following video to view it on your screen. Talk to you there.